Travel is flying high, and industry gauge of airline stocks is outperforming the S&P 500 this year thanks to the travel boom. The S&P Super Composite Airlines Index, it's up 60% this year. Compare that to a 27% gain for the S&P 500, marking the best year for the airline industry gauge since 2014. This has been massive, and we've had the opportunity to speak with Bob Jordan of Southwest. He's joined us here in studio. I've had the opportunity to speak with Ed Bastian of Delta Airlines, and all of them are really shifting towards what the premium consumer can provide to all of their operations, both in margins, but also just in customer lifetime value as well.
Yeah, Brad, I really enjoyed the last conversation you had with Bob Jordan, laying out the case for why the airline market may be good, not just next year or the year after, really for the next 5 to 6 years. But shout out to Connor Cunningham. He usually comes on our show from Milius Research. In a recent note, he outlined some of the drivers for this hot airline demand. Inflation has eased. You've seen services and expenditures or experiences continue to be a hot topic. Wealth creation, helping to drive more travel by the affluent. And then just corporate confidence starting to come back too as a result of the election outcome. Put all of these together, and I think you're understanding why you're seeing these travel stocks continue to do well. But, can it continue, Brad? Have we seen peak travel recovery?
Well, and also who benefits the most from it? And unfortunately, right now, you still got even more of a question mark that is looming over the ultra low-cost carriers. I'm thinking about Spirit and I'm thinking about Frontier. Spirit, a company so embattled now that as you think about what has to take place for them to get past some of the bankruptcy concerns here and really move forward as an airline that not only has price as one of the levers that they can pull, but also has experience, even while everyone is going to be starting to expect more premium of a travel experience that they navigate through. What does Spirit need to do to invest further in, put more capital in at a time where they were already hoping for this infusion via a buyout or via a combination and merger in order to make sure that they can better compete with some of the top tier airlines out there?
You do a lot of work on the airline space, Brad. I mean, can you confirm that Spirit actually has seats on its planes?
Yes, they do.
that experience, but
that
to
is
your point,
yes.
It's not good. And the thing is, what do you do with Spirit? Because they've just garnered this reputation as being a terrible experience. They can't trade up. They can't trade up market, really.
Yeah, Spirit has had one of the lowest net promoter scores in the industry for years.
At least they have a score.
They have a score. However, if you're anyone out there who keeps tab on the Spirit Airlines NPS, let's just go into a quick shallow dive of that, because anytime you're looking for an NPS, you want it to be positive, because that means that you have more people who are contributing to the narrative around your company than detractors, and that's typically the way it weighs out. If I'm taking a look at comparably, they have a negative 56 right now.
That's terrible.
So
you can't stay in business like that. Shout out to Delta. I got a cheese board on my recent flight. I was pretty excited about that, bro.